What is Bitcoin? Bitcoin is a fast-growing evolution of money, an investment, a way out of the current unsound economic system, and a new programmable payment method. Various concepts and disciplines could be approached to fully understand Bitcoin because it can be of different utility to different people. The various avenues will be revealed when going down to Bitcoin rabbit hole, and the journey will be captivating. You can start learning about Bitcoin's purpose, who created the coins, and if it is real money, including more practical advice about buying Bitcoin and how to keep your coins safe. Let's go. Bitcoin is an electronic peer-to-peer cash system based on a distributed digital ledger called a blockchain or time chain. The ledger includes transactions approved by the peer-to-peer network instead of a central authority. Bitcoin refers to the protocol, software, and network, while Bitcoin with a lowercase b describes the native monetary asset. Unveiled by a mysterious person on a group known as Satoshi Nakamoto, Bitcoin is the first cryptocurrency ever created and was described in detail in the white paper published on October 28, 2008. A digital version of cash, which is in its physical form, is inherently peer-to-peer, was the hardest thing to build, and the genius of Satoshi was to combine existing technology and process to overcome the enduring issue of double spending digital currencies without relying on a third party. Nobody knows the true identity of Satoshi, who disappeared in 2011, leaving the project to volunteers to expand and upgrade. Therefore, it's fair to say that Bitcoin has no single leader and can survive and thrive without a CEO. Readers who need a comparison can think more of an internet protocol such as TCP/IP than a company. How does Bitcoin work? When users send or receive Bitcoin, their transaction is sent to the network of Bitcoin nodes. Each node receives the file and verifies that it's legitimate. Once verified, it's added to the mempool and then passed on to the other nodes in the network. The mempool stores valid yet unconfirmed transactions. Miners then group those transactions together and create a block of transactions, typically selecting those transactions with the highest fees first. Each block is encoded with a block header, transaction counter, and transactions, which contains supporting information about the transactions and the hashes. Miners then compete with each other to be the first to append the next block to the blockchain. The miners or mining pool within the most computational power has the best chance of doing so. However, that is not deterministic. Transactions are confirmed and new blocks are added thanks to the proof of work consensus algorithm that requires miners to find a valid hash below a target set by the network. The successful miner is rewarded with new Bitcoin as a reward for securing the network. This is now not the block reward, and it's how new Bitcoin are mined. Each block is linked to the previous block, thus creating a chain of blocks that cryptographically establishes a public record of valid transactions that can't be altered or immutable without altering its block and the ones after it. It's worth noting that the protocol defined the rules and POW determines how these rules be followed and is regarded as one of the most secure solutions to the Byzantine general's problem, a more academic term for solving the double spending problem without relying on third party. Users don't need to know how Bitcoin works precisely, like they probably don't know how the internet works despite benefiting from its use. However, it's helpful to grasp Bitcoin's basics as it will help them understand why Bitcoin matters. Why is Bitcoin revolutionary? Bitcoin technology facilitates a trustless economic system where borderless financial transactions can be finalized without intermediaries. While traditional banking and payment systems heavily rely on trust, Bitcoin offers a way out of this system with no third party to resolve the double spending problem and maintain properties like censorship, resistance, immutability, and decentralization. Such a framework allowed the certain and implementation of a system effectively disjoined from government control, delivering a revolutionary separation of money and the state for the first time in history. Bitcoin breaks all models we are used to, starting with reduced state power and control, the exact reason governments and their affiliated mainstream media spread disinformation and FUD about Bitcoin. Bitcoin offers real digital scarcity, which makes it a store of value asset, censorship resistance as an assurance that everyone can use it at any time and everywhere, with no discrimination, settlement finality, which almost instantly ensures that transactions are irreversible. Bitcoin's settlement finality is still a widely underrated feature. While it represented traditional payment methods like Visa, credit cards, and SWIFT as the underlying structure of bank systems. These more conventional payment systems may take up to 6 months to settle, while a typical Bitcoin transaction is finalized within 10 minutes to a couple of hours. Bitcoin's second-order effects might offer real innovation and a solution to some of the crucial issues the world is experiencing nowadays. The switch from the inflationary to a deflationary society that Bitcoin and generally all technology encourage will increase our purchasing power, improve productivity and efficiency, and shape more cost-effective systems while creating a more equal world. The energy sector and climate change are also being addressed by Bitcoin champions. Besides increasingly employing renewable energy, Bitcoin miners are capturing waste energy or gas flare energy in regions like the Middle East, where oil production is considerable and gas emission need to be contained. Bitcoin is key to an abundant, clean energy future. What is Bitcoin used for? Bitcoin's innovative technology offers beneficial utility to every participant, from individuals to businesses. Fast and easy mobile global payment can be performed through a simple scan and pay method without needing a burdensome verification process like Know Your Customer (KYC) rules typically require. A purchaser will display a QR code while the receiver only needs to scan it for the transaction to be processed and verified. SHA-256 cryptography ensures security and control over your money, guaranteeing that funds can only be spent by their rightful owners. The energy employed by POW prevents other people from attacking Bitcoin by rearranging the blockchain and altering your transactions. Also, Bitcoin allows users to protect their privacy better and send transactions pseudonymity if they employ the proper measures, such as changing the Bitcoin address each time they execute a transaction. Long-term savings. Bitcoin's volatility often dissuades institutional and retail investors because they don't assess its value in long term. Indeed, volatility is expected, and as the price grows and liquidity continues to flow in, Bitcoin's price will mature and stabilize. Bitcoin's volatility has captured the attention of greedy investors who contributed to its rapid price increases. They end up buying out of greed but staying for its promise, which means as time goes by, Bitcoin becomes a stable network of enthusiasts that will not easily sell its native asset, thereby improving its soundness. Trading. Like every asset with value, Bitcoin has become one of the most traded holdings in recent years. There are plenty of tools available for anyone who wants to start trading Bitcoin, and many traders have turned it into their primary source of income by learning strategies to take advantage of Bitcoin's volatility. The common goal for Bitcoin traders is not to grow their capital in fiat terms, but to increase their Bitcoin holdings. Inflation hedge. Bitcoin has grown as a hedge against long-term inflation, unlike traditional currencies that lose purchasing power over time. The cryptocurrency has proven resistant to such market conditions thanks to properties like scarcity, increasing technological accessibility, and durability. Remittances. By removing intermediaries and enabling borderless payments through the Lightning Network, Bitcoin is growing as a tool to facilitate remittances. Emblematic is the growth of Bitcoin remittances in El Salvador, where the cryptocurrency was adopted as legal tender in 2021. And remittances account for 24% of El Salvador's GDP. The country could represent a testing market for international remittances in other countries. Collateral. Decentralized finance, DEFI, is an emerging and fast-growing branch of finance caused to secure mortgages, refinancing, and other services where Bitcoin can be used as a collateral asset to secure funds in different currencies or assets. While this is still a gray area for many who offer traditional financial services, Bitcoin as collateral is already operative and widely used by cryptocurrency supporters. Payments. Layer 2 protocols have been created to tackle the scalability issue and often faster and cheaper off-chain payments than Bitcoin's base layer 1. The best two examples that have been developed are the Lightning Network and the Liquid Network, both built on top of Bitcoin and offering the same robust decentralized security paradigm. Energy monetization. A monumental breakthrough in energy production is happening right before our eyes. What has typically been seen as a huge problem due to excessive mining power consumption is becoming an advantage for Bitcoin. The idea is to exploit excessive renewable resources of energy production, monetize the surplus supply of the power output, and make the project cleaner and more cost-effective. Bitcoin miners are particularly fitted for such a scheme since they can move and settle where the power is, even in remote areas, to fill gaps, thus driving a clean energy transition. It's a win-win situation for the miners who get plenty of cheap energy and for the energy providers who manage to sell surplus electricity that would go wasted otherwise. Is Bitcoin a safe investment? Pros. Bitcoin is considered a safe investment primarily because over time it has become highly secure thanks to its SHA-256 algorithm, which was designed by the US National Security Agency, NASA. No other cryptocurrency can claim the same security. Bitcoin's blockchain has never been hacked, and as time goes by and blocks are added to the chain, it becomes increasingly difficult to attack. Bitcoin's supply and issuance are programmed by protocol that its predictability is an important feature. So as long as supply-demand economics upholds, the properties of scarcity should prevail. Bitcoin is also unique and secure as private property because once you own it and store it properly, it cannot be taken away from you. It doesn't rely on a local authority or legal system to protect it. Instead, it's secured by the natural incentives of those participating in the network. Bitcoin investors should also consider that their Bitcoin is safer in the Bitcoin wallet than their cash in the bank where it is rehypothecated. If we consider the Lindy effect, according to which the life expectancy of the technology is proportional to its current age, then Bitcoin can be expected to exist for at least another 12 years. Moreover, despite being declared dead hundreds of times in the past, Bitcoin appears to be here to stay, and we can expect it to live much longer. Cons. Price volatility is often seen as a significant issue to potential Bitcoin investors, but many will argue that that's actually a feature, not a bug. To start with, Bitcoin is still a relatively new asset and, as such, it's prone to substantial price swings. price volatility has reduced over time, and this trend is expected to continue as Bitcoin matures. Moreover, Bitcoin's fluctuations are only short-term, and the price tends to go up in the long term, especially if you consider a multi-year chart where the trend becomes apparent. Technical barriers are normal for new technology, and Bitcoin's learning curve can be daunting for newcomers. However, using wallets, keys, apps, and all accessories become easier with time and thanks to companies' contribution to better usability.